my stream about the ruthless nature of crypto and trading. So, what do I mean by that? I've been taking trading courses, traditional trading courses on the stock market, on a variety of strategies that you can do. The two of them being momentum strategies or mean reversion strategies. So, cryptocurrencies are momentum strategies, right? They have blow off tops. And what I learned is that a momentum strategy is driven by retail investment primarily. So retail buys the asset, the crypto, the stock when the price is really high. So institutional investors don't do that. They maybe sell when the price is high, but they don't buy when the price is high, generally speaking, right? So there are exceptions, but generally speaking, no. So what I mean by ruthless nature, in the courses that I've been taking, it's explicitly said, and in a nice way, that that trading is a zero sum game. So especially short term trading, you can argue that long term trading that where you held for years and years and years, and a company develops itself, it grows, that perhaps that is not zero sum, meaning that for you to win, someone else has to lose, right? I heard another argument that it's not zero sum because there are dividends that you can be paid. Similar to staking, there are dividends, but staking is not a dividend because a dividend is cash. So if you turn your staking and it's not locked up, assuming like Ethereum is locked up, so you can't, if you did the new Ethereum one, the new Ethereum that's going to come out. So if there are dividends for stocks, then maybe that's not zero sum, meaning that for you to win, someone else had to lose. But there is a very exploitative nature to crypto, and all of these collapses kind of showcase that a lot of these assets are just not backed by anything, and that they're arbitrage. They bypass regulations, and savvy money, people with lots of cash, institutional investors buy when the stock is low at the ICO. I did a recent video that's going to come out on Thursday at 7 on Aptos. And I know for a fact that the ICO for Aptos was 1 cent. So people with lots of money can buy Aptos for 1 cent and they can sell it for whatever it is worth now, a lot more than 1 cent, like $100, a little bit over $100, $80, between $80 and $120, something like that. Huge gains. And when they sell it, they offload it into the market. They flood the markets into a lot of retail money because the savvy people got in early. They got in at the ICO, and they flood the markets. They flood the retailers. So you're getting screwed, right? Because you didn't have the chance to buy it at 1 cent. They flood the markets and they sell it to you. I was listening to this other one, Algorand. And it was I saw a BitBoy's video about 2023 and beyond, where he talks about how they're teaming up with the World Economic Forum. They're going to change banking. And there's a lot of merit to the effects that blockchain technology will have in banking the unbanked, the SWIFT payments as replacements. That's all true. The technology can do that. But trading, especially for crypto, it really is a zero-sum game 90% of the time, 99% of the time. So when someone makes money, somebody else loses money and gets screwed. So it is absolutely ruthless, right? I mean, and in crypto, there can be these crazy collapses. So it's even more ruthless than the traditional markets. And when you think about savvy investors that have lots of money, can buy it 1 cent, dump it for 100, the person who bought it for 100 is a sucker, right? They're the loser. They don't make money, and they lose money for the savvy investors, for the venture capitalists to make money. And so, and in these trading courses that I'm taking, they make it clear that you want to trade with people who are dumber than you, who don't use as good tools as you do, who aren't as sophisticated as you do, don't have as much market experience as you do, who don't do charting as you do, who don't have strategies like you do. You want to trade with that person because you will take their lunch. So, are you aware of this when you buy cryptocurrencies? Are you aware of how ruthless it really is? Are you aware that the technology can bank the unbanked? That's great. I'm all for that. But when venture capitalist buys it 1 cent and dumps it for 100 for retailers, that people are getting screwed, absolutely screwed. And it's just, I don't think enough people acknowledge that what you're engaged in is like somebody with a tank fighting against somebody on horseback with a bow and arrow, and the retailer is the bow and arrow. It, so it is brutal, absolutely brutal what you're doing. You are engaged in a brutality, and I think oftentimes it's seen through these lenses of, we're going to change the world, we're going to, they have all this great stories, and it can do that. The technology can do that, absolutely can do that. But also people are getting screwed. I mean, they just are. They are, and you have to acknowledge that. You have to. It doesn't off-put me to be in it because I feel like I've gotten smarter. I see it for what it is. Most cryptos aren't worth having. Most crypto portfolios are like 50% Bitcoin or more, right? Because every other coin is crap. Every other coin is the dumping of a VC on a retailer where you get screwed. That's 90% of it, maybe more. And there are more extenuating circumstances than the simplicity I am describing to you. But I mean, I just want people to just be really aware of what they're doing. It's a zero-sum game most of the time, 99% of the time, with rare exceptions. The people who got in early are doing really good. The people who don't sell and have the patience to wait, if they bought the right thing, which most people did not. Most people buy crap coins. I bought crap coins. I had losses, but a lot of mine was Bitcoin. A lot of mine was, I bought good coins and I didn't sell them, and I still have them. Like, right, I'm still in it. I've wisened up. I've taken trading courses. And now things are apparent to me, very apparent to me now as to what's been happening. And so you don't want to get sold on this story about how this is a revolutionary technology. It can be. Some of them are. Most of them are not. Most of them are not that. Most of them are VCs dumping on retailers. I mean, that is absolutely the truth of what is going on. And you need to acknowledge that so that you can be successful. This doesn't off-put me. But if someone is out there seeing things in rose-colored glasses, I just feel like people need to know this. They need to acknowledge this ruthlessness, this dark side. There's dark side to stock market, right? There's a dark side to armed conflicts. But these things happen. It's in nature. It's not saying I want them to happen. I'm not saying it should continue to happen. I'm saying they happen, and I can't stop them. I'm powerless to stop the armed conflicts. And there are great benefits to these companies, a lot of them, but most of them are not. Most of them are abusive VCs dumping on the market. And if you understand that trading is a zero sum game most of the time, that retail should never really play against VCs because VCs are more sophisticated. VCs have more money. VCs got in early. VCs have connections, and you don't. Then you either have to get the experience, uh, know what you're doing, right? You can win. People win in crypto, but most people don't like, and they don't win because they don't acknowledge this. They don't see it, the benefits and the downside. It's just all upside. It's just all we're gonna change the world. That's not true. It's not true, and it's not gonna start to be true. Most of the coins might go to zero, probably, with regulation. And the ones that survive that will do super good. Like Bitcoin is a guarantee, right? Maybe Ethereum is a guarantee. Really only Bitcoin. But when you hear that Algorand has partnered with the World Economic Forum, that can be good for Algorand in the sense that they have connections, or it could just be more VCs dumping on the market. I mean, just because they've partnered with investors doesn't make them good. Doesn't mean they're going to survive the regulation. They might survive more than somebody who is not. But if all they are is a vehicle for dumping, then you're screwed. You have got to know the tokenomics of these things. The vesting periods. The vesting periods are when the people at ICO are allowed to sell their coins. With Algorand, they can dump those on the market and screw retail. So don't be that guy. Don't be the retail that buys at $100 in the middle of a bear market. I mean, you can do that if you have a really tight stop loss, if you have a strategy for momentum trades, right? But that makes you smarter. That makes you more savvy. You have to know that. And if you don't know that, you're getting screwed, buddy, lady. That's the reality of this. And you have to deal with it. You have to know that's what's happening and wisen up, take courses, traditional trading courses, and wisen up, have a better strategy, have a better stop loss, have risk management, money management, position sizing. All those things are crucial. And they would be very obvious to you if you really understood what it is that you're doing. It's a zero sum game where a lot of people get screwed. Don't get screwed. Easy. Don't get screwed. Have a tight stop loss. Take 15% loss, not a 99% loss, right? Only buy the good ones. Bitcoin, Ethereum, Cardano. I'm not going to tell you what to buy, but the only really secure one is Bitcoin right now for the next foreseeable 5-10 years. There are probably other ones that'll do well. Most will not. Most are not worth your time. Most are crap coins, shit coins that you should not ever touch with a 10-foot pole. Always look at the vesting period. Do your own research. And then you're smarter. Then you've stopped being the moron retailer if you do those things, right? But if you don't do those things, if you don't want to do those things, you don't have the motivation to do those things, maybe you only buy Bitcoin and nothing else. Maybe you don't do it at all. You'd be better off. Don't be the dumb retailer without a strategy, without position sizing, without risk management. Don't do that. Don't be that person. Most people are. Most retailers are. Unfortunately, some people got really lucky. They came in early enough, like the savvy VCs who came in early, right? Maybe they did. Some people just did the right thing at the right time. They're doing great. They didn't know anything. That's fine. If you're that guy, congratulations. I'm so happy for you. I wish I was like you. I didn't get into it until later. But I know I'll succeed because of what I'm telling you, because of what I wisened up. You need to wisen up, people. It's ruthless. Absolutely ruthless. And you need better strategies. right? Don't do it the way you've been doing it. Do more. The technology can bank the unbanked, can give, financial infrastructure, investments into third world countries. It can do that. It can also screw you. Both of those are true. They're both true. And you need to have a strategy. So this has become very apparent to me. I wish I knew sooner. I'm sharing it with you now that it's apparent to me because I feel like everyone needs to know this. There are bad things, there are bad actors out there. There are people who, on smaller exchanges, will pump up the price. If a few people with money can ramp up a price, you see this pump and dumps, right? Have you ever been taken advantage of in a pump and dump? Have you ever been in a rug pool? This is happening a lot. And you need to buy the best of breed. You need better experience. You need to handle yourself. Just handle yourself. Tighten up, as my friend used to say. Be smarter, and you'll do great. The opportunity is there. Technology is there. Don't get screwed. Thank you so much for your time. And I hope that some of my advice has really opened your eyes. Trading cryptos is a zero sum game 99% of the time. And you need to be smart. You need to be savvy. Or you need to not be in it at all. Because if you are in it and you're not savvier, you're going to get screwed.